In this video, we are going to talk about how to start a real estate investment. So, before starting the video, please like this video. Do subscribe and turn on the notification to our channel for future updates. It is possible to achieve financial success while still enjoying the satisfaction of owning a home through real estate investing. In contrast to stock and bond investors, prospective real estate owners can utilize leverage to purchase a property by paying a portion of the total cost upfront and then paying off the remaining balance, plus interest, over an extended period of time. 1. Rental properties. Rental property owners can be an excellent investment for persons who are skilled at do-it-yourself, DIY renovations and have the patience to deal with difficult renters. In order to finance upfront maintenance costs as well as to cover unoccupied months, this method will necessitate a significant investment of capital. Sales prices of new homes, a rough estimate of real estate values, grew regularly from 1940 to 2006, according to data from the United States Census Bureau, before declining during the financial crisis. Following that, sales prices began to rise again, eventually approaching pre-crisis levels in some cases. However, the long-term consequences of the coronavirus pandemic on real estate values remain to be seen at this time. 2. Real estate investment groups, REITs. Real estate investment groups, REITs, are a great option for people who wish to own rental property without having to deal with the headaches of managing it themselves. Investing in REITs necessitates the development of a capital cushion, as well as the acquisition of financing. REITs are similar to small mutual funds in that they invest primarily in rental property. In a typical real estate investment group, a corporation purchases or constructs a collection of apartment buildings or condominiums, after which it allows investors to acquire the properties through the company and therefore become members of the group. Single investors can buy one or many units of self-contained living space, but the firm controlling the investment group maintains all of the units on a collective basis, overseeing upkeep, advertising vacancies, and interviewing potential tenants. In exchange for performing these management responsibilities, the corporation receives a part of the monthly rent as compensation. Standard real estate investment group leases are entered into in the name of the investor, and all of the units pool a portion of the rent in order to protect against periodic vacancies. This means that even if your apartment is vacant, you will still earn some money. Providing the vacancy rate for the pooled units does not rise to an unacceptably high level, there should be enough to cover expenses. 3. House flipping. Those with extensive experience in real estate valuation, marketing, and renovation should choose a career in house flipping or renovating. House flipping necessitates a substantial amount of finance as well as the capacity to do or supervise repairs as necessary. This is the proverbial wild side of real estate investing, where anything can happen. Just as day traders are separate from buy-and-hold investors, real estate flippers are unique from landlords who buy and rent out their properties. As an example, real estate flippers frequently seek to financially sell the discounted houses they purchase in less than 6 months after purchasing them. Property flippers who only want a profit from the sale of their houses rarely make any improvements to their properties. As a result, the investment must already have the inherent worth necessary to generate a profit without the need for any modifications, or they will remove the property from consideration. Real estate flippers who aren't successful in selling a home quickly may find themselves in problems, since they often don't have enough uncommitted cash to cover the mortgage payments on a property over the long run. This can result in losses that continue to accrue and snowball. In addition, there is another type of flipper that earns money by purchasing cheaply priced properties and adds value to them through renovation. If you are looking for a longer-term investment, this may be the best option for you if you can only afford to take on 1 or 2 houses at once. 4. Real estate investment trusts, REITs. It is better for investors who wish to have portfolio exposure to real estate without having to engage in a traditional real estate transaction to invest in a real estate investment trust, REIT. A real estate investment trust, REIT, is formed when a corporation or trust uses money from investors to purchase and operate income-producing assets. REITs are traded on the major stock markets in the same way that any other stock is. In order to maintain its REIT classification, a corporation must distribute 90% of its taxable profits to shareholders in the form of dividends. Rather than paying corporate income tax, REITs avoid doing so, whereas a typical firm would be taxed on its profits and then have to determine whether or not to distribute its after-tax gains as dividends. Similar to normal dividend-paying equities, real estate investment trusts, REITs, are a smart option for stock market investors seeking regular income. In comparison to the forms of real estate investment described above, REITs provide investors with access to non-residential investments such as shopping malls and office buildings, which are typically out of reach for individual investors to purchase on their own. More crucially, because they are exchange-traded trusts, real estate investment trusts, REITs, are extremely liquid. So, in order to cash out your investment, you will not require the services of an agent or the completion of a title transfer. In practice, real estate investment trusts, REITs, are a more institutionalized version of real estate investment groups. 5. Online real estate platforms. Real estate investing platforms are for those who want to pool their resources with others to make a larger investment in a commercial or residential property. Investing in real estate is made possible through the use of online real estate platforms, often known as real estate crowdfunding. It is still necessary to invest funds, however, it is significantly less than the amount required to purchase houses outright. Online platforms bring together investors who are looking to finance projects with real estate developers who are looking to sell their properties. You may be able to diversify your investments with a small amount of money in some instances. So, that's it for today's video. What are your thoughts on our video? Please let us know in comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button and turn on the notification to our channel before you go. Thank you so much for